It is so extremely hard to beat that stock market average that you're very likely better off just tracking the stock market average. And there are some very well-known investors like Warren Buffett, who's also a very big advocate for index investing, and specifically in his case for investing in the S&P 500. And Jack Bogle, the founder of Vanguard, talks about buying the haystack instead of trying to find the needle. And with finding the needle, that means looking for the best stocks or trying to analyze and see which stocks you should pick. And if you just buy the entire haystack, then you're sure that the needles, the 5 to 10 needles that are going to actually drive the outperformance potentially, or the performance of the stock market for the next 5 years, would automatically be included in the haystack if you just buy the entire haystack. In the case of the S&P 500, for example, represents the 500 largest companies by market cap, by value. And it's dynamic. When a company shrinks, it will be excluded from the list if it's not in the 500 largest companies anymore. It will then be replaced by a new company. And the ETF adjusts like that. You don't have to worry about which stocks you should be including or excluding, because if you're a passive index investor, you're just tracking the average of the market. And by tracking the average of the market, you're going to be much better off in the long term than someone that tries to pick stocks, or someone that pays high fees for someone else to pick stocks.